Welcome to Empower Hour. Get the knowledge, be empowered. Hello, everyone. My name is Evelyne Cohen, broker, owner, realtor of Living Great Real Estate. And today we have Sheetal Sawhney, licensed mortgage loan originator with Cross Country Mortgages, who's going to be speaking to us about the very important, timely topic of forbearance versus forgiveness. Good afternoon, Sheetal. Thank you so much for joining us. Please go right ahead and introduce yourself to our guests and attendees. And this is a very frightening time that we're all living in. And, you know, if you want to just jump into it, please feel free. And we do have some specific questions for you. Good afternoon, Sheetal.
Good afternoon, everyone. Thank you so much. Just as she said, my name is Sheetal. I'm a mortgage banker for the last 23 years. I'm a branch manager at Cross Country Mortgage. So this is all I do. This is all I know. And I love doing what I do. I love doing mortgages. Most importantly, helping clients, because that's what it's about, helping them buy their homes and retain their homes and to see them happy and comfortable after they purchase the home, which is so, so important. So this is a great topic because these are very interesting times. It's very sad to see some people go through a lot of pain. And therefore, this is a very timely topic, and I appreciate you to put this together. So talking about forbearance and forgiveness, so the government, it has allowed people, there's so much pain right now. There are people who are unemployed. There are people, some are for a longer time, some for a shorter time. So obviously some of them cannot make their mortgage payments during this time. So the government said, okay, you can call your servicer. Your servicer is the mortgage the company that you actually send your payment to. So you have to call the phone number on that statement. They're the only ones who can guide you and who can answer your questions. You cannot assume that the bank will structure your loan based on what someone else, based on some other story, because each case is unique and there is no cookie cutter answer. So the first thing you do is you call them up, and it's very easy. This has been announced by the government, so they will very easily allow you to not pay your mortgage for the next 3 months or 6 months, and you can talk to them directly about it. Basically, it is for people who really genuinely have a hardship during this time. And that's why this program was put into place. But again, it's if you are able to make your mortgage payment, it is a good idea to make your mortgage payment, and I'll tell you why. Because after the 3 months, when your payments are due, they expect you for most of the times to pay that whole 3 months in one shot. So it's, you have to be ready for that. And if you don't think you're going to be able to pay the 3 months altogether, then plan accordingly, right? So that is extremely important for people to know, that some of the services may add that 3 months to your mortgage, existing mortgage. Some may propose a second lien. But the way to know your exact option is to call the phone number on the mortgage statement. You must call them directly and not take anyone else's guidance. No one has the power, the authority, the control, obviously, than your own lender. Your lender is structuring this for you, and therefore you have to speak to them directly.
You did say that some of them are imposing a second lien. The Banking and Commission Department of New Jersey has a list, as I mentioned to you before we got started, it's a very, very long list of many bankers and credit unions and servicers that are providing these forbearance programs. But you're saying that each one has their own lien that they might or might not impose, so you should definitely ask them when you're inquiring about the forbearance.
Yes, so what's advisable is to get your facts and to hear it directly from your lender and not anyone else. That is the point I'm making. because you wanted, this is about your family, this is about your house, this is your investment. This is where we live, and therefore it's very important to get facts in order before you make a decision. You need to know what your lender is proposing, and then you make a decision. But the point is, this is not a forgiveness. So it doesn't mean that, hey, listen, we know it's hard times, don't pay your mortgage for 3 months. That is not the case. Some people do misunderstand it. I mean, I've spoken to some people who misunderstood it. So that's why I'm just repeating it again, that it will be due in some form, and that you need that information. It's just, you have to call that phone number.
So each forbearance program then is subject to the interpretation of that lender and or servicer. So regardless of what we have heard out there, that a forbearance could mean a stalling or an addition of the term, you really have to identify it within your own lender's structure, because you could find that by doing the forbearance, that in fact your loan is actually all 3 of those months that they're allowing you to stall, I guess, is really actually due on day 1 of the 4th month in its entirety. And yet you're saying also that maybe that some of them may be just adding it to the term, and you just pay it off a little extra each month beginning the 4th month. Is that what I'm hearing? Or
yes, right after 3 months, a lot of them are saying, okay, now you have to give the complete 3 months of mortgage plus the mortgage, the 4th month of mortgage. So now you have to pay 4 months. Now that's a big amount to come up with in a very short period of time.
yeah.
You just have to take that into consideration and be very mindful of facts. Now, on the other hand, one other thing, right now, the rates are so low. It's incredible how low the rates are. So I've had cases where we are doing a lot of refinancing. We're very busy with refinancing because this has created an opportunity to lock in a very, very low 30-year fixed mortgage. However, if you do decide to take the forbearance route, you cannot do a refinance for 12 months. It's important that you know, because I had some clients, and I could hear their voices, they regret it. They were like, oh my God, oh, I didn't know that. I wish I knew. I don't want to do it anymore. Can I just, you know what, it was too late. They didn't make their mortgage payment for 2 months already. So that is something, again, you need to know. I think it's extremely important. We just have to just show a lot of compassion for people going through such a hard time. But at the same time, we just need to know facts. So, and we as leaders, we're in real estate, people are calling us, people come to us for advice. We just need to give them facts so they know what they can do, what they cannot do, and what to expect.
Okay. So just a quick question I wanted to ask. When and if anybody decides to do the forbearance program, does that affect their credit score and their credit rating overall? Will it put them in a, no, it won't.
It doesn't. No, it doesn't. This is a government, this program is during these crises, and the government has come up with this program, so no. But if you want to refinance, then no, because the guidelines show that you didn't pay your mortgage on time, and that guideline kicks in. So you have had to make your mortgage payment on time for 12 months before we can do a refinance. So that would come in the way.
Okay.
So right now rates are low. So if you have a higher rate, to get a rate in the high 2s and a low 3s is attractive. It is a very good opportunity.
Are the lenders, though, with, a lot of the refis that they're seeing, are they adjusting their fee schedule to accommodate, these folks that are trying to refinance because they don't have the money in anticipation of, this pandemic? Are the lenders, is cross country, in fact, reducing their fees that they're charging normally for refi?
Absolutely. So let me tell you something even more interesting. If there is a really, really good loan out there, which we are doing so much of right now, and it's called a streamline. If you have an FHA loan, what we can do is reduce your payment by reducing your rate, without checking income, without checking, doing an appraisal, and with no bank fees.
Without an appraisal, huh?
No appraisal, no income. Now think
Wow.
about it. That's a big one. No income.
Yeah. So
Even
what are you
if
relying on then to qualify them? I mean, you're taking the taxes?
no, I don't want no pay stub. We're not doing an employment check. We're not looking at a pay stub. No taxes, nothing, right? So all I need is their bank statements. I need the fact that they occupy the property. So I need a driver's license to show that this is their primary residence. But again, most important, they have had to have that FHA loan. So it's from an FHA to an FHA. We're doing the same 30-year fixed, just lowering the rate and therefore the payments.
Wow, that's
So
good.
this is
Good to know.
extremely, yeah, and this is not like a money maker for us. This is more a service-oriented loan. We're doing tons of it, though, but that helps our clients. Like, it's fun to even give that option to clients because there's so much gratitude. They're like, oh my God, this is great.
Sure.
Hey, you mean I can save $400? Yeah, you can. It's a really good loan. But again, if you were in forbearance, then we cannot do it.
Okay. And then forgiveness, Sheetal, is something entirely different, obviously. And that doesn't even really, you're advising people, just don't even bring that into the equation when you call me, because you're asking for something that I cannot service, right?
No, and I'm not the servicer, and I would not say anybody should answer that question. The only one thing I want to say again, because that's really important, please speak to your servicer. They gave you the money, they own your mortgage, they're the ones who should be able to tell you every option that they can work with you on. So please listen to them. Just because a family or friend or someone you know got an option, it doesn't mean you're getting the same. So it's just be very crystal clear and talk to them.
Okay, cool. Very interesting. So how are you finding that people are making the change, with this tide? It's an uphill tide. I mean, are you finding that the refi, is the best solution that you're recommending to your, the people that are calling you? Are you advising the realtors that you work with to suggest a refi and obviously to call you because then you would get that loan? Or are you suggesting to realtors to suggest the forbearance, or are you just saying no?
So first thing is that as realtors, our clients love realtors. You guys get them their first home, their biggest investment of their life. They like you, they trust you. It takes a lot to take a client and get a closing from the beginning to the closing table. So there's a relationship. So when they call you, it's first of all, I would say don't even wait for them to call you, right? This is the best time to call your database. Call them up and ask them, how are they doing? There are some people hurting more than others. Ask them questions. Are they employed? Are they working part-time? For how long are they unemployed? How are they managing financially? Are they able to make mortgage payments? Do they have reserves? Are they okay? Are they healthy? Most important, right? That's the biggest question, is how's your health? So you know what? Ask them these questions because you can then tell them what not to do, right? If they haven't heard of the forbearance, then tell them about the forbearance because it is for people in need of this is the time when you can't make your payment. You're obviously going to eat food before you pay your mortgage. You're going to provide for your family before. If that's the case, then please do the forbearance, right? That's a choice given to you. But if not, then tell them about the rates. Tell them there are options that are out there that they should talk to a lender and get their options. So, we as a realtor, we can guide them and tell them what's out there, connect with them. Because sometimes if our clients have a multi-family, have a 2 or 3 family, even if they're working, maybe their tenants are not working and not paying their rents. So that could be another challenge. So we need to ask them, are your tenants paying the rents to you? Right? So in one form or shape, we can offer our services to our clients and at least talk to them and educate them and give them some direction.
Okay. So what would you say to, realtors that are having these conversations with their customers as far as if a question pops up, well, what does the next 60 to 90 days look like in the finance marketplace? From where you stand, Sheetal,
Okay,
what would you
okay,
say?
that's great. So here's what happens, right? Every time there is an adversity, there is some crisis, the finance industry is the very first to get impacted, right? Because you're talking about money. And of course, there's fear with the banks when they're lending so much money. So it tightens up. So let me tell you what's happened in the last 60 to 30 days. The very first thing that happened was jumbo loans. Jumbo loans, when you're looking at a loan over a million, in the million, the big size loans, their entry point became harder. Now they're requiring a better down payment, higher down payment, better credit scores. So that tightened. The second thing was stated income loans. Loans where we were saying, okay, let's just look at your 12-month bank statements and not your taxes and, alternate income loans. They're the ones that are also impacted. Some of them just totally discontinued those loans. Some of them are there, but they changed their guidelines. They've become stricter, right? So, however, when it comes to the government agencies, such as FHA, Fannie Mae, Freddie Mac, they're great. You're backed by the government. So we're doing very strong with them. As a matter of fact, we are very busy doing those loans. I mean, my marketplace is a lot of that loans anyway. So we're doing great with those loans. So the agency loans are still doing good. People still have an opportunity to buy 3.5% down loan and buy their first homes. Now, what is more important is, are you working? Do you have income? With unemployment rate being over 20%, a lot of our clients lost their jobs or they're just there's a temp layoff. So those are questions that we need to see. But people in the health industry, people in the education, people in government jobs, they are very strong, and I see them still buying, making offers. Their offers there's less of a bidding war, as a matter of fact. So they're
Less of a what? I'm sorry?
less of a bidding war.
Mm.
Because prior to Corona, the market there's a lack of inventory. So every good house had multiple offers. Now, they still have a chance of getting the house they like.
Yeah, we're seeing that too, for sure. So, to come in as a first-time home buyer right now, you're saying, we need to look at your employment and we do need to look at your taxes, but your down payment may not be such a huge thing, or it is even more so now. So you're finding that maybe new home buyers are limited because they're getting a lot of rejection from the lenders.
No, not really. As long as you're working, as long as your credit is decent, fairly decent. We're not even looking at for like a phenomenal credit. Now, the bigger banks, they changed their entry point for credit scores. They require higher credit scores than we do. Because we service our loans, we service it with Ginnie Mae, which is a government agency, we still can do a loan with, if you have a 620 credit score, we can still do it with your 3.5% down payment or the government affordable 3% down payments. We're still closing those loans without any challenges.
Good stuff. Wow. Okay. Okay. So I guess you said that the appraisals that you're not doing appraisals on I'm sorry, I'm just trying to follow. There's a lot of information here. On the refis, there's no appraisal, or on new home purchases, there's no appraisal. There's just no appraisal across the board.
Oh my God, I'm so glad you asked, because I don't want a misunderstanding on this call. So appraisal is the most important part of a finance transaction, of a mortgage transaction, because it's the collateral that we lend on. The reason we can lend money with such little money, such low down payment, right? 3.5, 5, whatever the case may be, is because of the collateral and the value. So an appraisal report is extremely important. When I told you no appraisal, it's only and only for a government streamline loan, just that one product. It's a quick refi if you have an FHA to an FHA. That's it. Keeping
Okay.
that aside, you need an appraisal for every loan out there. Now, because of the situation, this virus situation, we have choices. We don't have to, the appraiser doesn't have to go to the property now. They can do something called a desktop appraisal. They can just do it on the computer, and they can just drive by the property. And if that option is taken, then the realtor plays a more of an active role, working well with that appraiser, providing them information that they have, be it photographs, any information, so you help the appraisers out. So that's what's going on as well. So there's flexibility with appraisals.
Okay. And that gets locked in. I mean, there's no modifying that. Once it's in, it's in. It's not going to be subject to a term of after the pandemic, we have to come back in and do an interior appraisal and change no, it is what it is. Great. Good to know.
Once the money is wired and you close the transaction, you're done. Yes.
Great.
The money's out, we close the deal. Yes.
Okay. And I wanted to ask you another question, if you don't mind. How are you seeing contracts coming in right now? Are they, I mean, you did say you've got still buyers are approaching you to get pre-approval and all that kind of stuff. Are you seeing an increase? Are you seeing a decrease? Is it about the same?
Yeah.
Are you
So yeah, there is a decrease. There is a decrease, of course, but however, I'm surprised that I still find buyers very motivated. I am still doing loans for people, again, they have a job, they want to buy, right? So if you're self-employed, like I closed recently, last week, we closed a loan for a restaurant owner in Hudson County. We had to wait till he reopened. He had closed down for a while. We need to make sure that he's back in business before we funded the loan. He did, we checked it, and then we closed. But people still want to buy a house if they can afford the payments. It's all about sensibility. Not everybody can buy, and that's the reason the contracts are less. But there are still contracts. Now, on the other hand, a lot of people, they have time at home. For the ones who are not working, so they have time, they want to start researching and saying, okay, once this is over, we go back to work. We really want to buy a house. Some people are living in condos, and now they understand that this is not how they want to live. I've had clients who called and said, oh my God, I need a backyard. I want to go to the suburbs. This is too dense. People are scared to be in a dense area. So they want to go a little further away, but have more space for their family. So that's another thing I'm seeing. People are already prepping for post-corona. After this is all over, okay, we want to buy. So what I'm doing a lot is coaching them and saying, listen, do's and don'ts. Let's keep our credit good. Let's improve our credit scores. Let's work on getting better and getting prepared. Once this is done, we already know the math. We know how much you're going to qualify for. We go all out. So we're planting seeds.
Okay. And you did say that the relief from the fees and charges are there, and are they for a set time? I know that the Department of Banking and Insurance has said that they're for 60 to 90 days. Is that a universal principle across the board, or every lender?
It's every lender is different. Every case is different. There's so many different programs. So that's case by case.
Okay. And then also I was wondering, I understand that at least where I sit anyway, that there are no new foreclosures for the next 60 days, that the financial institutions will not start any new foreclosures, sales or evictions for that matter. Yeah. Are you seeing a lot of imminent foreclosures coming up yourself from past customers that you've had?
No, not yet. Not yet because there's relief. Like you said, everything is at a stop, right? There is no foreclosure right now. So
Right.
there's a lot of relief being offered, whether it's unemployment income, whether it's the forbearance, whether it's easing on rent payments. So with all this going on at this moment, the answer is no. But after the 3-6 months are over, we have yet to see what's going to happen. Are they going to be able to catch up? Are they back to their jobs with the same salaries? That will determine the affordability, right? If you have income, we're doing good. When
Right.
income goes away and unemployment kicks in, that's when we have a challenge in our business.
And are you hearing about, well, evictions don't really affect you, so that's an irrelevant question. But basically, the ones that were on the sheriff's sale website, for example, that were due to go to sale, have an opportunity at this point, and so therefore I'm recommending my agents to speak with them to do perhaps a remodification. Maybe is that possible, or probably only if they have a pile of money under a pillow or something that they can pay back some of the,
Right. So again, the loan modification can only be done by your servicer. By servicer, I mean the mortgage company you send your payments to. The only people can answer your question because they've lent you the money, they own your mortgage. So it's case by case. They have to review the value, they have to review your income, your credit, your debts. And then they do a debt to income ratio. They have to work out and say, okay, if we reduce the payment by X amount, can they still afford the payment? If they can, then they structure the modification accordingly. So it is case by case, and there's a lot that gets into it before they give you an answer. It's no cookie cutter answer.
And how long, at least from where you sit, do you anticipate that these types of programs are going to go on for and last before the government says, that's it, we're done, no more forbearance, no more refi allowed? I don't know. I mean, maybe refi is not in there, but forbearance, I mean, will that come to a point where they say no more? Do we think? It's too soon to tell?
It's any answer is an opinion. We don't know what the government is going to do. However, I mean, I applaud the government for giving so much help. So much money has been put into this market just for people, for relief. So I think all these answers will be dependent on the coronavirus results. So, I mean, in my world, with my team, our theory is 1 week at a time. We're looking at this week, and then we see what's going to happen next week and next week, because we really don't know. We're all watching, getting the same news, and everyone's attempting, staying indoors, staying safe. So we have to, all the numbers will speak.
Right. Okay, interesting. And so with the forbearance, if some of your clients qualify for those and you get them into those programs, do they still have to pay their property taxes and insurance even though they're not paying their mortgages?
No, because for most of the people, the taxes and the insurance is a part of the mortgage payment. It's all included. Okay. So after the 3 months, they have to give their 3 months of mortgage payment, which it's a package deal. They usually pay the principal, interest, mortgage, the taxes, and the insurance in one monthly payment. Now, for those who don't, you have to pay your taxes because that's what they were doing.
Right. Go ahead, Enrique.
I have a question though, but wouldn't the mortgage lender cover the insurance right away? Because couldn't you run into a problem if they don't cover I mean, I understand that the person who owes the money, the homeowner is not paying the mortgage lender, but typically a mortgage lender would pay the insurance and may even be paying the taxes to avoid any accumulation of fees from the towns, right?
Yeah. So you're right. So look, this is only a short-term situation. This has just started. So this is not a long term. This is a short term relief that we're getting into. The home insurance, when you buy a house, you prepay your home insurance for a year. You buy a policy for 1 year in advance. So even if you did not pay your mortgage for 2 months or 3 months, you have a 12-month paid up policy for that reason, Enrique. You got a good point up, because we need to protect our collateral. We're giving a lot of money based on the collateral. We are not going to take a chance and let that collateral go by without insurance. Tomorrow, if it catches fire, what happens to our money? We will protect it. You're absolutely right.
We have Ramona that has a question. Ramona, go ahead and unmute yourself. Unmute yourself. There you go.
Hi.
Go ahead.
Just real quick, I know you had mentioned FHA. Could you give me information as far as conventional versus FHA? Because not everybody is going to qualify for an FHA loan.
Absolutely. So conventional is when you go to the Fannie Mae and the Freddie Mac, right? That's conventional. So FHA allows you to buy a house with 3.5% down. It's going to be your primary residence. It could be a 1 family, 2, 3, or 4 family. So 1 to 4 family with only 3.5% down. If you have a 620 FICO score, we can do it. Okay? Now let's go to conventional. Conventional, we have a really good affordable loan that I do a lot of. It's 3% down for a 1 family, 5% down for a 2 family. It's either 5 or 15%, depending on your credit score, your DTIs, your income. There are some income restrictions, so it just depends. So there's typically more down payment required for a conventional loan. Okay, it's a stricter loan than the government loan. Reason, because FHA is an insured loan by the government. That's why the government says, okay, we want to promote home ownership. We'll give you a loan easily, but we're going to insure the loan just in case there's a default.
Good question.
I have one more quick question.
Yep, go ahead.
As far as the FHA, it has to be your primary residence. Do you also are you required to live there for a certain amount of time?
Yes, so you're required, when you sign and when you get an FHA mortgage, you are definitely, this is for somebody to occupy the house and make it their primary residence. I mean, there are cases you are expected to live there for a year. Now, after a year, if you do decide to rent it out or sell it or move on to another property, that's common. That happens sometimes, and that's okay. Your intention was always to move, and you occupied it after you got that mortgage. That's important.
I wanted to ask a question. If Ramona, are you done with your question?
Yeah, good.
Okay. So what if a financial institution isn't offering this kind of relief, Sheetal, and somebody's stuck in a program with a financial institution that, is not offering the relief? What's being done about that if you're getting any of those calls?
I cannot imagine any financial institution not offering it when the government of this country has announced it. That would be discrimination.
Would it be?
Yeah, because this is not a lender coming up and saying, hey, we're going to give you forbearance. It's not each lender that came up with it. This came from the top. This is a government. This is all over the news. You could just go to CFPB, you could Google it, you can go anywhere. Any government website, it's right there.
So it's available for secondary homes as well?
Yes, it's available. Yes, you need to call your lender and they will tell you everything that's...
Now, what about if it's a hard money lender? That doesn't apply.
That doesn't apply.
Right.
Because that doesn't fall under government agencies. So no, that is not.
Okay, great. What if a bank or a mortgage servicer is not communicative or not cooperative? what would you recommend they do?
Oh my God, I don't know why they would do that.
Some people are less informed. Some people don't know the right questions to ask.
No. I think they need to call again and speak to someone else in that institution, because I would be surprised if somebody would not help them. Right now, it's not difficult, guys. It's not difficult to go get a forbearance. It's easy. You just call them and they're all ready to accept your calls, ready to do it, because this is coming from the top. They have been helped by the government. A lot of money has been put into this economy for these relief programs.
And I'm also finding that to further aid homeowners, facing the hardship, that the New Jersey Housing and Mortgage Finance Agency is offering homeowners free counseling through their foreclosure mediation assistance program, and that the counseling is free. So everybody should be checking with their local townships to find out where those relief programs are, if you're not aware of the kinds of questions to ask, which can be very complicated and multi-tiered, that they should at the very least reach out to their locales for some immediate help, I think.
I agree. There's a lot of help out there. Yes.
Yeah. Is there going to be a national moratorium?
For what? For what?
Well, I'm seeing that for some borrowers on March 18th, the U.S. Department of Housing and Urban Development announced a foreclosure and eviction moratorium that applies to single-family homeowners with Federal Housing Authority FHA-insured mortgages for only 60 days. So that's just wondering what your take on that is.
I mean, I haven't come across anything of the sort, not as of yet.
Okay, and they're saying Fannie Mae and Freddie Mac will also suspend foreclosures and removals for at least 60 days for homeowners behind on their mortgages. So at least for 60 days, we can kind of all just sit tight and see what changes are going to come about.
Yes, but again, for every homeowner or renter, 60 days will pass. And you just have to know there will be 61st day, and then you just have to, it will open up. This is temporary, it will open up, so plan accordingly.
Okay. Okay, so if anybody has any questions right now, other than the few that were just answered and asked.
I'd like to ask a question. If you have an investment property with a home equity line of credit on it right now, I would imagine if your rate is somewhere in the high 4s, low 5s, since it is an investment property, and if you wanted to consolidate those two loans together, since it is investment, is that a higher rate? And how much point difference makes sense to do a refi with the home equity, your first mortgage, and how many points,
So you see, there's a lot that will get into this answer. Number one, what is the value of the house? Number two, what type of investment property is it? A 1, 2, 3 family? Because all these questions that I'm asking you has rate adjustments. What is your credit score? All of these ties in to get to do an analysis and to say, hey, listen, is it worth doing a consolidation of the first and the second? What is my benefit? What's going to be my new payment, my savings monthly, versus what are my costs? How long will I take to recover my costs to do this? So refinance is not for everybody. This is the time to review it, because you always want to try and save money. This is a big investment we have. We should do it. But again, it's not for everybody. How long are you going to keep the property? If you intend to sell it, then don't refinance, because there is a cost involved. So there are a lot of questions you look at, and you do something that makes sense for the client and the homeowner.
Well, if you're saving if you're in the high 4s and you get something in the low 3s, is that enough?
Yes, if you're saving a point in the rate, absolutely, yes. And you're going to keep the property. Your intention is not to sell it, because if you're going to sell it in 2 years, you barely recovered your costs, right? So
costs could be,
yes,
say say it's a point on the loan. So say you take out a $500,000 loan now. In general, is it about a point for the fee to the institute? Like, so $5,000 plus the closing.
No, so we have to do the math. I would hate to just throw in a number just like that, because that number can mislead. So it's always better. There are a lot of questions we have, and then we have to do an analysis, estimates, and give it to you. This is money we're talking about, and I think the more accurate you are, the only way is to be accurate.
Mm-hmm. One other question, and then I'll turn it back. If you are an investor, I would imagine this might be a good time to buy a property, whether it be a single family or because people, might be closing. They're in trouble. Maybe they don't want to do the forbearance and they might want to sell, or there might be empty properties that are looking to unload at a reasonable reduction in the sale price.
Alan, you're absolutely right. So there are a lot of sentiments right now. There are a lot of emotions, there are a lot of sentiments, there's a lot of crisis. So there's also fear. Fear is one of the sentiments that's going on. Some people want to move to the suburbs and they don't care about making a huge profit. They just want a change of lifestyle. And they're willing, I've seen it, they're willing to sell their property at a reasonable amount, at a reasonable price. Now also, there were some people who bought an investment property a couple of years ago, and now their tenants are not paying their rents. They don't have the capacity to carry a mortgage on their primary, their investment. There's a cash flow issue. They want to sell it. They don't want the headache. They're like, oh no, let me just keep my house and let me get rid of this. So, cash flow is important for an investor at this moment, where if you don't receive rents, like, can you carry forward your expense or not, right? So you're right. Yes, there would be some opportunities for investors. As a matter of fact, I'm doing a lot of refinances cash out. We're doing a lot of cash outs where we consolidate.
Can you explain that a little bit, please, Sheetal, for some of those that don't know?
So if you own a property and you have equity in the property, let's say if your interest rate is 4%, we can refinance, get a much lower rate, and at the closing, do a cash out, take your equity out. So you could get, for example, $50,000 or $100,000 cash back. Now, because the rate is lower, your monthly payments are not getting affected. Now you have the money. With the money, you can either pay off your debts, your credit cards, which are at 20 to 30% interest, or if you're looking to become an investor and buy another property in the near future, you can do that as well. So you're leveraging, you're taking your assets, you're leveraging assets for a higher rate of return.
Right. Okay, cool. Interesting. Okay, so I think we're going to wrap it up now, unless anybody has one final point. But, we're at that point where we're going to get a little too long. So unless anybody has any questions, I don't see anybody raising their hand. I'm just going to end with this final point that obviously for realtors here and for attendees that are consumers that are interested in this discussion today, there's a lot of banks and state chartered banks, credit unions, and servicers who have all agreed to provide mortgage forbearance and financial protection, which was announced, at least in the state of New Jersey, by our governor, Phil Murphy, on March 28th of this year. And obviously, to utilize the relief in the programs, just please contact your financial institution, as Sheetal said, or your servicer directly. I do have a list, but if you'd like, I can certainly share Sheetal's information directly in the chat box for you to contact her privately. Should you have any inquiries, I'm sure Sheetal can help you navigate these very complicated waters. And without further ado, Sheetal, I want to thank you very kindly for your time. We know it's valuable, it's precious right now, but it's so meaningful to have you help us, understand some of the different things that we're all wondering about at these crucial times. Again, this is Eve Cohen. I'm broker, owner, and realtor of Living Great Real Estate. And thank you for joining our weekly Empower Hour. Stay empowered, stay informed. Thank you again. God bless. We'll get through this.